Netflix earnings, Quarter 2, 2020. Ownership disclosure. As of the recording of this video, I own this stock. Netflix reported their Quarter 2 results today after the bell, and there's a big reaction, so I wanted to do a quick overview of what's making the stock move and why that happened. This is a good case study for market expectations and growth. This was an interesting report for Netflix, who's one of the companies that benefits from the COVID-19 stay-at-home environment that we're experiencing all over the globe. Revenues beat slightly, earnings were down. They're having issues creating new content, but they have so much data and information available that they're still, monetizing what they have, and they had a lot of stuff, coming through the pipeline before all of this happened. We'll see how their content creation gets back on board as guidelines change with COVID and all of that stuff. Net ads were better than expected by 2.5 million. The reason why the stock is down is because those 2.5 million ads are being guided down for quarter 3. Basically what they're saying is quarter 2 was really busy. A lot of people signed up, and we think that's going to eat into our new signups going forward, quarter 3, quarter 4. The initial reaction on the stock when this news happened was down about 10%. The earnings call hasn't happened as I'm recording this. The CEO and the management team will get on a call and they'll answer a bunch of questions, and there'll probably be more reaction tomorrow. But the initial reaction, the market did not like what they heard, and they don't like the slowing growth that could potentially be coming down the road. This is that Q3 guidance for net paid ads. You can see in the orange box. They were expecting guidance of 5 million plus. It's really about the 2.5 million that they pulled forward. So the market wanted this guidance to be around 5 million expected. But that came in light, and whenever expectations and guidance come in low, that's actually more important for the movement of the stock than quarter by quarter earnings. As we're always looking forward, the market wants to know, how are you going to continue to grow and generate revenue? This is an indication that maybe all of those people that were going to join over the next 6 months, they already joined. There's a good amount of noise in this report that I think people could potentially be overreacting to. If you're looking at the bottom line in these slides, quarter by quarter, EBITDA is growing. It's going in the right direction. They're continuing to add net subscribers at a record pace. Now the challenge shifts towards, can they continue that momentum? Can they beat their now lower expectations in quarter 3? 2.5 million new subs, that's a number that they should be able to beat, especially if professional sports, fail to open up and those content hours remain Netflix heavy. 2.5 million is a number that I think that they can beat. I'm going to remain long personally. This is a stock that I own. It's not a huge position, but I continue to own it because the management is strong and the amount of data and resources that they have are really unmatched in the industry. Really, them and YouTube in terms of understanding what people are watching and what they're drawn to and being able to monetize that. They're definitely the two best in the industry.